Monday, August 20th, 2018, Maneco 64, home of alternative economics and contrarian views. So this morning I went for a walk around the park for about an hour. I was trying to do more exercise. I do play golf 2 or 3 times a week, but I think it's good. You feel good after you go out and walk for an hour. In my 20s, I did start jogging, and I used to jog a lot. Started slowly and then gradually increased the distance, and yeah, it's really healthy. I recommend it. It's tough doing it. You just gotta get out there and do it. The discipline is the toughest part. Hopefully I'll keep it up. Billy is up this morning. He just came down. It's around 8:35 a.m. London. I'm going to look at the markets this morning, of course. And then I'm going to talk a little bit about the housing market. I've been reading a lot more stories here in the UK about how prices are starting to drop. It could be just like a blip. Things could continue higher. You never know in these markets. They can remain irrational for longer than you can remain solvent. I think that was something that Keynes said, actually. But UK housing, it's really important to the economy here in the UK. The bank's balance sheets are lumbered with those kinds of paper, mortgages and other things, commercial real estate, residential, and it's right now interest rates in the UK are still very low. The Bank of England has been able to keep them fairly low, but I think it's becoming harder and harder. So it's as I said, it's around 8:36. So what's going on in the markets? Spot gold, 1186.80. It's up about $2. So it has remained steady. We closed quite well on Friday, near the highs, around 1185. Earlier last week, we had like what I think for now is a capitulation low. Overnight, one of the days last week, I forgot exactly, gold dropped to 1160 and then rebounded sharply back up to 1175. So we've managed to continue going higher. The range this morning has been 1182.50 as a low to 1188 as a high. So fairly narrow range. Silver has been kept a little bit under the lid at the moment. 1477. It's down about 2 cents. The high has been 1484 and the low 1472. So we need to see silver maybe catch up and even outperform gold, though. Stock markets, while the Dow is up 1/3%, up 84 points, 25,750. S&P 500 is up 1/4% at 2856, and the Nasdaq 100 future is up 1/3%, up 25, just above 7,400. Currencies, they're fairly steady this morning. The pound's a little weaker, down 6 pips, which is a marginal drop. 127.44. The low's been 127.29, and the high at 127.55. Euro is down about 20 pips, or 0.2%, 114.19. Low has been 114.10, and the dollar is a tad stronger against the yen at 110.63. What about the Chinese currency? Well, the dollar is up 0.1%, so not much to write home about there at 684. Emerging market currencies. The Turkish lira is, the dollar is up another 1.2%, and the dollar is at 610. So the lira remains under pressure. Brazilian real is not trading yet, so we need to wait for that. South African rand is a little stronger this morning, so keep an eye on these emerging markets, of course. Bond markets, well, I think Italian bond market is an important one to keep an eye on right now. The 10-year yield this morning is at 310, down 2 basis points. Key levels there around 325. If we close above that level, look out. The US 10-year is at 286, unchanged. I think, yeah, we've got another week until a week to 15 days until the markets start really maybe, how can I say, coming back to life after people come back from holidays in Europe and in the US. September, October are known as months that can be quite rocky for the market. So I think we still need to wait for that. But you never know, things could kick off even earlier. So UK home prices or house prices. When I got to the UK in 1992, they were in the middle of quite a bad housing market. They had a credit boom, late 80s, early 90s, created by Chancellor, what was his name? Nigel Lawson under Margaret Thatcher. And then everything just fell off the cliff. And then the market stayed quite moribund up until 1996, 1997. And then with the new Labour government came in, things started picking up again. They brought in new, they reformed the market. I think they allowed banks to lend more on mortgages, not just building societies. That was Gordon Brown who changed that. And yeah, the market became quite, how can I say, yeah, it grew all the way up to 2007, 2008. I mean, I experienced that. We bought our first house in 1997, our first family home, and we weren't looking at it as a trade or investment. It was just to, we had a family, we had a baby, and we just wanted somewhere to live, but we were shocked at how the prices went up a few years later, and it kept doing it until 2007, 2008, and then it all imploded. But then they threw everything at the system again. They bailed out the banks, RBS, which is still owned 62% by the government or taxpayer. What else? They printed hundreds of billions of pounds. They guaranteed, I think, 500 billion of bank loans. The Bank of England, up until recently, is still doing QE, buying toxic mortgage paper, bank paper that basically are on their balance sheets. But if they were to put them in the market, they would probably not get much. So everything's been done to keep the housing market up, not only residential, but commercial. And why is that? Well, because the UK economy has become so dependent on housing consumption. I think 2/3 of the bank's balance sheets are derived from housing, real estate, commercial real estate, buy-to-let. So if this market starts unraveling, it will put the UK banking sector in danger, the whole financial system. So what's keeping that going right now? Well, it's the Bank of England. They've been able, with the governments, the politicians, they've been able to, how can I say, keep interest rates low. I think the other thing as well, the banks have been helping out because the banks know that if they attack the gilt market or the bond market, they're going to go under as well. The pension funds, they play the game. they got their heads in the sand, the fund managers. But one day the market will take over again. It's not normal that, for example, the 2-year yield in the UK, the gilt, is less than 1%, or that the 5-year yield is at 0.99%. Would you really lend the UK government money for 30 years at 1.72%? I wouldn't. And that's what's keeping this market going. But now we're starting to see stories of how house prices are coming down, even though interest rates are still very low. So what's helping that? Well, I think it's just supply and demand, or normal market action. When things get too frothy, they tend to correct down. Like the house prices. The other thing is that I think people, the cost of living is going up. The pound is continuing to be debased. We were at over $2 in 2007-8, thereabouts. Now we're at almost 120. Brexit, of course, hasn't helped, but it's not it's only a symptom of all the problems that we have. And the major problem that the UK economy has, be it the government, be it the consumer, be it corporations, is that 4-letter word. We have massive debts. And right now it looks like the UK housing is having problems. So this story this morning here on Bloomberg, UK home prices dip with London leading late summer sale. Why is London leading? Well, because that's where the epicenter of this bubble is, especially the expensive part of London, central London, West London. So what does Bloomberg say? And I read here, UK home sellers are offering the deepest summer price cuts on record as they try to get rid of their homes during the holidays. The average asking price for homes across the country in August tumbled 2.3% from July, according to property website Rightmove's housing index. In London, the plunge was even steeper at 3.1%. And it goes on to say, while it's common for sellers to cut their asking prices over the summer, this year's August drop was the deepest since Rightmove started publishing data in 2001. The report adds to signs that the British housing market is weakening after a 3-decade boom dragged down by stretched affordability, slower economic growth, and uncertainty created by Brexit. Yeah, 3-decade boom, which had, while in the middle of that boom, though, we had a big collapse in 2008, 2009. And I remember, house prices did come down, and now we've gone back up to above where they had been. And so they've been able to blow that bubble again, and I think it looks like we're seeing signs that it's starting to burst again, this bubble, and it will be even worse than I think 2008, 2009. We'll keep an eye on it. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. And I'll talk to you later. Take care. Bye.